Greetings, everyone. I'm excited to welcome Tal Kirschenbaum, co-founder and CEO at Ledge, to the show today. Tal, welcome to the show.
Hey, Ben, thanks for having me.
Yeah, great to have you here. Excited to jump in, especially talk some finance and your product. But first, let's talk about your background. Tell us a little bit about your background.
So my background is kind of a broad finance and business background. I actually started my career in venture capital after studying accounting and economics, went into venture capital with Intel's corporate VC arm, Intel Capital. This is part of their Israeli coverage office in Tel Aviv. Then went to business school at University of Chicago, did some strategy consulting with BCG, moved to and joined Facebook's corporate development team, where I led M&A deals for Facebook, acquiring companies for Facebook and some of its other assets, Messenger, WhatsApp, Oculus, and Instagram. Then joined a payments company called Melio, which does AP and AR automation. Think of it as kind of a Venmo for B2B, where I was able to dive even deeper into kind of payments and fintech. That's also where the specific constellation around what we're solving today at Ledge came to be, and founded Ledge just over a year ago.
Oh, awesome. That's a great background. And so is this your first startup role then, or first time founder?
Yeah, this is my first company that I actually founded. I've always been close to founders. First as an investor, later on as an acquirer, and later on as an employee at a startup company, one that experienced pretty fantastic growth. But this is my first founder experience. Yes.
Yeah, that's awesome. A lot of time at the other side of the table, now this side of the table, which is really interesting. So yeah, let's dive into Ledge. Tell us what products and or services Ledge offers.
So Ledge is an automated finance operations platform and solution. And essentially what we do is we help finance teams with their day-to-day tasks. So things such as reconciliation, such as handling of payment errors, and providing visibility and helping companies better manage their treasury. That's really what we do. We do that by integrating with a company's banks, their processors, and then there are other finance tools such as their ERP and invoicing solutions. What we essentially do is we help serve as a layer that connects the finance team with that entire infrastructure and stack that oftentimes is comprised from these separate, unconnected data sources that we help first connect and then better manage and draw insights from.
Yeah, so interesting, very specific with the payment reconciliation. And now I was on your website looks like maybe a new treasury management platform or product. But yeah, tell me, maybe your experience at Melio, where did this idea come from to really focus on a very specific, you could say, pain point within the back office of finance and accounting?
So absolutely, that is the kind of the origin story for us. Melio, as a payments company, has a tremendous volume of payment that it processes and handles on behalf of its customers, and as such, that really brings along pretty significant complexities and challenges from an operational standpoint. Think of the finance team at Melio that has to stitch together multiple different banks and multiple different processors that act as Melio's infrastructure, and then they have to make sure that data, that those payments are also reflected well enough in Melio's internal databases and Melio's ERP system. And that presents pretty significant challenges. So much so that Melio actually had to go ahead and develop its own proprietary internal solution to try and automate that on a massive scale. And, when you're dealing with such a high volume of payments, that is simply a necessity, something that you have to do. Now Melio, as a payments company, has the privilege of having the relevant R&D teams in place and the relevant payments expertise to be able to pull off such a development effort. But that is actually a privilege that only very, very few companies have. Now, the pain point of having to deal with, standardize, clean up data that is related to a high volume of payments, that is a much, much more common situation and issue that we're seeing. And so we really founded Ledge to help companies who might not have that relevant payments expertise and who might not have the relevant R&D resources that would be allocated towards helping a CFO solve what is really sort of a back office finance issue, that is really why we founded Ledge, to help those teams with that specific type of a task.
Yeah, really interesting. I know in the back office of SaaS companies, definitely payment reconciliation a pain point, but tell us a little bit about your ideal customer profile. Are you going after different industries, going after CFOs? Tell us a little bit about who you're after with your product.
Absolutely. So for us, the key deciding factor is a company's payment volume. A company that has a payment volume of, let's call it, over 1,000 payments a month. That's a situation where trying to manage that manually by continuously throwing kind of people at the problem becomes pretty challenging. We know of quite a few companies that actually have teams of 45, 50 people. All they do is reconciliation, as an example. And that's aside from treasury management, of course, and trying to handle payment operations as well. And so for us, the key part of the ICP is whether a company has that significant enough of a payment volume. And we see that across different types of companies. Generally speaking, that tends to be mid-market and enterprise tech companies. And that sits across multiple different segments. So we see that in marketplaces and platforms and SaaS companies, both vertical and horizontal ones. We see that with insurance, real estate, advertising, gaming, and of course, fintech. This kind of problem and pain point is not just a painful one, as I'm sure you and many other finance teams know and have the battle scars to show for it, but it is also one that is unbelievably common and broad. It is really one of the lowest common denominators in finance, really.
Yeah, I know as a CFO, it's one of those things that it's like, maybe it's not a sexy thing, but such a critical thing to solve. And just, because there's, as you know, so many finance and accounting is so transactional. As we close the books, prepare the financial statements, reconcile the payments, our subledgers, all that stuff, a lot of process in place and just tons of transactions as our company scales. And if we don't have the tech in place, it can get wildly out of hand, which I'm sure you've seen a lot of prospects that you talk to.
That's 100% true. And, it's a few interesting things that you just said. So first of all, I couldn't agree more with the fact that reconciliation is probably one of the least sexy things that you can think of, right? I actually think that as a business opportunity, it's so unsexy that it's actually sexy, right? Mm-hmm. It's so unbelievably painful to solve in a manual way, which means, you've got someone at least, or a few people on the finance team trying to download CSVs from multiple different sources, right? A company's ERP and then an internal database and processors and banks, and then pulling all that into a massive spreadsheet, trying to use VLOOKUPs and index match functions and, maybe some scripts as well to try and tie that all together. That could be very tricky. And even that doesn't provide you with a good enough of a coverage. So not only are you spending a significant amount of time and effort on this, but you're not getting to where you need to get. And that means you're probably experiencing losses as well, because we all know this, payments have this interesting property of tending to break. And so you've got chargebacks and ACH returns and reversals and wire transfer failures. And when that happens and you don't have a good enough of a handle on it, then you're paying out of your pocket for those transactions. And that really adds up. We're working with companies, as an example, one company that's transacting to the tune of over $1 billion a month. And they're actually experiencing losses that are quite significant, over $1.5 million a month in losses. Now they're able to recover 2/3 of that. But what that means is that $500,000 a month is simply something that they have no other option but to acknowledge as a write-off and as a loss. And that really has significant implications to it, right? It gets messy really quickly. It's one of those things that as a company kind of grows and starts to scale and the business is now booming and doing well, that success, that booming of the business is a double-edged sword, right? Because that means that the finance team in the back office is now struggling. It's one of those things where it's never an issue until it's an overwhelming issue that consumes the finance teams. And all of a sudden you've got folks on the finance teams who all they do is just try to get a handle on what's going on in the day-to-day, operations, rather than being able to divert attention and work and focus into the more strategic elements of their work.
Yeah, makes a ton of sense to solve that problem. So tell us, when did you found Ledge? What year did you found the company?
So we founded a company last year in the second half of 22, where when the market was already kind of at a standstill pretty much. Fear of recession was of course looming over everyone's heads. And even that was a pretty interesting experience, starting a company during that time, raising our seed round during that time as well. That was a pretty interesting thing to go through.
Yeah, definitely interesting times. So the back half of 2022, you founded the company. And are you virtual? Do you have a headquarters?
So we're based out of New York, and we also have a significant R&D presence in Tel Aviv, Israel. And so I split my time between the two.
Okay, sounds good. And then what's your current team size?
Right now, we're just under 15 people, but we're fortunate to be growing pretty well. Again, this all kind of comes back to when we actually started the company and the general macro environment at that time. Um, for us, we knew that things were going to be pretty challenging for the next couple of years. And so when we raised our seed round, we really optimized for one thing, which is runway. We wanted to have enough funds to be able to execute on our vision and do that in a comfortable way. And so we were pretty conservative in terms of ramping up the team. We wanted to first see signs that what we're doing is adding significant value to our customers. And so only then did we actually accelerate our kind of general plan and hiring plan very specifically, and started adding additional folks to the team. And we're still growing the team and will continue to do so over the course of the next few months.
Yeah, well, I love that. And we'll talk about your fundraising lessons. Anything you want to share? Are you pre-revenue right now? Are you generating revenue? Anything you want to share around the scale of your company right now?
So we are already generating revenue, and for us, that's something that we feel very fortunate and lucky to be able to do within less than a year of actually starting the company. Where we have a product that we're able to launch very quickly. Within about 4 months of when we started the company, we launched an MVP and started working with design partners, and then over time started working with different companies, first in the form of kind of pilot programs to demonstrate the value that we can provide, and then converted them into becoming paying customers, and we've been working with a few of those since.
Yeah, that's great. That's a quick turnaround or quick MVP and then to revenue generating. That's awesome. And tell us a little bit about your current go-to-market motion. So obviously reaching out to the Office of Finance and Accounting, so is it outbound, just cold outreach? How are you finding your prospects? How you getting a hold of those CFOs?
It's a combination of a few things. First is really outbound sales and enterprise sales. So reaching out to companies, and we have a good idea of which company would make a good fit from outside in. You'd be able to tell if a company should have a significant enough of a payment flow based off of the number of customers they have, based off of the team size, and also based off of their industry. So companies in specific industries and sectors are more probable, more likely to actually see significant complexity in their back office as it relates to payments. Think of a marketplace, for example, that has pay-ins coming in from buyers and payouts going into sellers as well. Even just having that type of a payment flow creates quite a bit of complexity. And so that is one type of characteristic that for us serves as an indication that someone on the finance team is probably experiencing quite a bit of pain as it relates to their general finance operations. And of course, aside from the outbound sales, we also have various types of distribution partnerships with companies that are tangential to what we do and comprise the part of a finance team's stack. And of course, we also have some inbound channels as well. This is a newer type of a category that we're establishing and creating and pioneering, and we're calling it finance operations. And we're seeing that it resonates very well with the persona that we're serving, which is finance leaders and folks on the finance team who are actually doing the work day to day. And so we're seeing, people come in through Google searches, through LinkedIn, through Twitter even, and various newsletters and so on, and podcasts as well.
That's great. And so you've raised 9 million to date, so $9 million seed round. And what led you to that seed round versus, say, bootstrapping it? What was the thought process around raising that seed?
So we knew exactly what we needed to build and to do. Again, this is something that I've seen done internally at Melio. We knew that this was a significant lift. We saw this as a very exciting opportunity, one that is quite broad. And so when we took both of those factors into account, knowing that this takes a significant amount of investment in order to build a product that would be actually able to solve the pain point, fill that need, that gap that we've seen in the market, and as well as the size of the opportunity, the size of how broad of a pain point this is, we knew that raising a fund, raising a round, and trying to very quickly get to market and demonstrate value, that to us made the most sense in terms of the best course of action at the time.
With raising the seed round, at that point in time, was it selling the vision, the story? Did you have an MVP yet? What was the sequence of raising this round and your product build?
So for us, it was a combination of a few things. It was a combination of the vision that we had, which was very much based off of what we've seen and done and we're familiar with from our own previous experience at Melio. And when we matched that with having a very, very clear, detailed plan into what it was that we wanted to build, with very specific details into that, and early development work that went into that, that kind of led us to the seed. And of course, a big part of what we did as part of the seed fundraising process was build this very specific composition of investors who we wanted to have with us as really as partners on this journey. And so for us, we wanted to have a very specific combination of people who are very deeply, intimately familiar with this specific problem and pain point. And so for us, that translated into Jonathan Golden from New Enterprise Associates NEA, who ended up leading our seed round. And Jonathan was the head of payments at Airbnb, and he's the person who built Airbnb's payments infrastructure, and someone who was deeply familiar with that specific problem and pain point. The first conversation I had with him, I started giving my pitch as I did many times up until that point. And within a couple of minutes, Jonathan stops me and continues my pitch for me, and actually told me eventually, I've been looking to invest in something like this for years. You're only able to do that when you have someone who is that familiar with the space. And that for us has been tremendous. And along with Jonathan, we also raised some funding from various fintech founders. So founders from Payoneer, Fundbox, Papaya Global, Mesh Payments, the spend management company, as well as some of the founders at Melio, the AP and AR automation company where I actually came from. And so we wanted to have that very specific constellation of people together with us as experts, as people who've experienced the specific pain point themselves, and who'd be able to serve as trusted advisors and partners for us on this journey.
Yeah, and did your venture capital background help you with finding investors or just narrowing the field faster than normal? Say a founder who didn't have your network. Tell us a little bit about that. Did that background help you in that seed process?
So I think it did in a couple ways. First of all, having some access, which probably is better than the access a first-time founder who generally have. That definitely helped. But I think another thing that was pretty helpful was just the familiarity and the experience I have with the fundraising process from the other side of the table. So being familiar with the very standard kind of terms and mechanics around the fundraising process, also understanding what investors expect to see. And it's things that are, as basic as simply knowing how to tell a story in a way that's going to be structured to the investment story that they then need to tell internally, and how they want to create conviction internally as they evaluate an opportunity. So that I think was pretty helpful for us. And even to the extent of thinking about, what does a term sheet look like? How can you structure different components of it and the different trade-offs that you can make? I think that was also pretty helpful throughout that process.
Yeah, that seems like it'd be a huge help. And Tal, as you guide your business right now, about coming up on your 1 year mark this year,
Mhm.
what's a favorite number or metric that you're focused on to manage your business and guide your business right now?
For us, the goal is quite clear and straightforward. As we think about the company's journey, we're working backwards from the next funding round, the A round for us. And I think this is always true, and especially in this kind of macroeconomic environment. What you want to have when you get to that point is proving product market fit beyond a doubt. For us, that translates into having a few dozens, plural, of paying customers who absolutely love what we do for them, appreciate the value that we provide for them, as well as the revenue run rate that goes with it. So we are aiming for a specific ARR target when we get to that point.
Okay, that's great. So looking at that A round coming up, looking at getting product market fit, proving that out, and having a few dozens customers and an AR target in mind, that's super helpful. So Tal, as we wrap up here today, what's next for your company? What's coming up that's new and exciting at Ledge?
So for us, it's a combination of things. It's continuing to expand the product by adding additional capabilities, which are again all additional components that are a part of the day-to-day workflows and processes that finance teams have and go through. That is really the core focus for us. So we'll be continuing expanding that product offering and helping teams automate additional functions of what they do. That for us is the biggest part from a product standpoint. And of course, as a company, we're looking to continue to grow, and so continue to execute on delivery of the product as well as on the go-to-market side. So continuing to expand our customer base, continuing to build an organization that knows how to bring in the business as well as supporting existing customers from a customer success, customer support, and operations standpoint as well.
Yeah, and that's really interesting because I love you've gone really deep domain expertise on the payments function, and now are you thinking just like, hey, what looking at finance and accounting in their daily life and just thinking, okay, what else can we interact here with, whether it's technology, process, other transactions? So is it really a study of what's happening in the back office to see where next to push the product?
That's exactly that. And of course, we combine that with what we're doing today and what's going to be easiest for us to expand into with a combination of what's going to be highest value to finance teams that we work with.
Yeah, it makes a ton of sense. Well, Tal, really appreciate your time today. As we wrap up here, if listeners would like to learn more about Ledge, where should we send them online?
So I think our website is absolutely one of the best places to go to. It's ledge.co, ledge.co. We also have our blog there with some exciting content, I think, for finance professionals as they think about how do they want to develop their infrastructure, their stack, and perhaps help increase efficiency and productivity through automation as well.
Okay, that's great. So if you'd like to learn more about what Tal's doing at Ledge, check out Ledge, ledge.co for more information, and check out their blog. And Tal, really appreciate you sharing your experience and stories today.
Absolutely. Thanks for having me.
Thanks.